Hi everyone, hope you're all doing well, and today we're going to talk about Greg's earnings, which the stock did really well off these earnings, so they were taken really positive. So we'll break down these earnings, we'll go through them. But yeah, I know it's Thursday, normally we do Tattooed Chef Thursdays, but hey, I guess the Greg's news was kind of bigger than Tattooed Chef Thursdays, so we're going to put the King of the Sausage Rolls in front of this plant-based product. The sausage rolls have come on top, so we're going to talk about them. And in general, there was like a few news stories, so there's a few videos I could have really made today, but I think what I'll do is I'll talk about Greg's today, and then I'll put all of the other kind of stories into a big video like tomorrow, talking about some stuff with like Gang had some really big news that came out, and some other stocks like that. So we'll kind of condense that into a bit of a news video tomorrow, but yeah, we'll focus on Greg's earnings. And I actually didn't know Greg's were actually reporting their earnings yesterday. I was kind of like, it was getting late at night, and then someone on the Discord was like, does everyone know it's Greg's earnings tomorrow? And I have no idea how I actually missed that it was coming up. And I was like, oh yeah, like I actually didn't have it written down that it was like Greg's earnings. So I was like, right, I'm going to have to look and see, like plan this out, get up early, normally out at 7 a.m, like reading it while having my breakfast. So I've actually got them here. I've highlighted a few things that I'll point out to you that were really important in those earnings reports, and it was decent overall. But yeah, totally nearly missed it. Didn't realise earnings were actually out. I know Boohoo's next week, so that's a big one. And the stock's been moving really good as well. But yeah, we'll talk about Greg's earnings because it did have a big, massive jump. And if you'd like to buy stocks when I buy them, just like how I was buying Greg's, I always post them on my patrons group. There's a link in the description. You join through there. You get all my buy and sell alerts like Greg's, which is now currently up quite a bit after the earnings. And also, as well as that, there's portfolio reviews, and also there's the Discord where you might end up getting reminded that some really important earnings are going on, like just how mine was. But yeah, we'll take a look at some of these Greg's earnings now, and we'll see how good they were. So like I say, they were taken really positive. The stock was like up double figures at one point, and yeah, it's done really well. It's been on a good run. And this is the fourth quarter trading update. So we can see here total sales of 811 million compared to 2019 sales, which were just over 1 billion, which is crazy, isn't it, for a company like that to like a bakery chain to be putting that much in. Insane numbers. But yeah, all these are the highlights here, and I've put the most important ones here, which is fourth quarter company managed shop like-for-like sales averaged 81.1% of the equivalent of 2019 level. So if I take you back to March time when I started buying this company, I said for me as an investor, the main target here was to get above 80% in 2019. And we've got that. So I'm really happy they've done that. It hasn't been a huge beat, but it's been good. And it's getting to the expectations that I expect for Greg. So even though these earnings were really good, I'll be honest, it's kind of where I expected them to be. So overall, I gave these earnings probably like an 8 out of 10 because they were good and they were where I want them to be, but I kind of expect it. That's why I bought it, really. So yeah, I mean, on the game plan, everything's looking attractive from this point of view. And yeah, I think like 80% is where I was hoping the company to get to in 2020. So yeah, my point of view now is that I would like them to get to 100% of 2019 numbers in the next 12 months. So they've got a year to do it. They've managed to do what I wanted them to do last time, and hopefully they get back to 2019 numbers by the end of 2021. And that's what I want them to achieve next. And if we look a bit later on, there's some promising signs that they could be able to do this. Now, this is the one of the ones which was the fourth quarter delivery sales were 5.5% of the company's managed shop sales. That was really positive. There's some other news about that which we'll get onto in a little bit. But yeah, having delivery now on Greg's is a great bonus. 28 net new shops that were opened up. We will talk about that once again a little bit later on. Year-end cash position 37 million. Obviously the balance sheet has been hurt, but I always said this company has zero risk of going bust because the management's fantastic and the balance sheet was insane. I don't think they even potentially need to raise this much money, but they did. But hey, and they will get on the end full year loss before tax expected to be up to 15 million. So this was the first little standout bit for me through the comments from Roger Whiteside, and he said, with customers spending more time at home, we have successfully developed our partnership with Just Eat to offer delivery service and have also seen strong sales through our long-standing partnership with Iceland. So it's good to hear what Iceland sales were. Hopefully when they do a full report, we'll get a bit more of a breakdown of them Iceland sales. Offering our products from home baking, we have resumed opening new shops where we will see good opportunities. with those sites accessed by car performing particularly well. So yeah, I mean, obviously the Just Eat is another arm, having the delivery was another arm to the business, which is really good. And like I said, there's a bit more plans on how they are actually going to ramp that up a little bit later on. Now this was a breakdown of some of the months, and we got here in the 5 weeks to 31st of October. So we know this is when in November we ended up going into a bit more of a lockdown, didn't we? And the tier system started picking up. But that time when it was kind of a little bit more normal, we saw a further improvement in the level of like-for-like sales in company managed shops, averaging 80%. So yeah, they got to that target of 80%, which I set earlier on in the year, which was great. Of that seen in 2019. In the 4 weeks to 28th of November, with more restricted trading conditions, so if you remember, this is when we started having a bit more of a tier system coming in place. The level of like-for-like sales in the company managed shops averaged 76% points, or 76.7%. So we can see lockdown will knock it down. I think this is why they've not put too much forecast out there, because that was when the tier system came in, that caused a 4% drop. And there's for sure with this lockdown, that we know that probably now, as long as January, February and March is going to be somewhere around this 70% range. So, I mean, we know that's roughly where it's going to be, but yeah, we can see that the lockdown did take effect, but we want to see positive news, like when things were normal, how were they doing? And that was positive that they got up to 8%. Of that seen in 2019, and this was one of the big statements for me in this earnings report. Trading in December was initially more robust, supported by the reopening of non-essential retail shops, although this fell back with the introduction of higher tier restrictions later in the month. In the 5 weeks to 2nd of January, like-for-like sales in the company managed shops averaged 85.7% of the 2019 numbers. So this even dropped up a little bit. So they were like suggesting that this could have been like 87%. So that was really, really positive to see that in January or in December, should I say, when things were quite normal, even though there was a few more tier systems creeping in, 85% was really, really positive. So yeah, we can see that the demand for Greggs is still there when there's a lot more normality and non-essential shops are open. They do pull in sales, which is the really key thing here. So that for me was the standout number in there. 85% was really, really good. And this was another statement to do with Just Eat. So I said that was really positive, but the news that came out was even more positive. So this was the information that we got about Just Eat, which was our digital offer continues to develop and roll out of our national delivery offer in partnership with Just Eat is supporting the recovery in sale levels. In the fourth quarter of the year, delivery represented 5.5% of the company managed shop sales, which is good. And this is the other key point. 600 of our shops now provide delivery service to catchment served by Just Eat, and we expect to increase this around to 800 shops in 2021. So yeah, I mean, 600 shops that are doing the delivery. Now you think that Greggs at the moment have over 2,000 stores. So only about 25% of the stores are currently offering Just Eat, and I don't think every store will have Just Eat delivery, because some of the locations are in the middle of nowhere on a service station. Like them stores are never going to offer delivery service, but there's definitely more than a quarter that could do this, and we see here we expect to increase this around to 800 shops in 2021. So yeah, I mean that's going to be another big massive improvement. If they get 800 shops, that's going to be another big amount of sales that's going to bring in from the delivery side. So you think if that makes up 5.5%, if we get 800 shops, then sales could potentially go to about 7-8% from this delivery side of it, which is really positive. There was a bit of information about the financial side, which is we ended the 2020 financial year with a net cash position of 37 million, having repaid monies due to the Bank of England under our CCFF facility. In place of this funding, we now put in place a 3-year, 100 million revolving credit facility with a syndicate of lending banks. And this is the little bit of the outlook that they put down here. Looking ahead, the significant uncertainty over the duration of social restrictions, along with the impact of higher unemployment levels, makes it difficult to predict performance. However, we do not expect the profits will return to pre-COVID levels until 2022 at the earliest. As we enter 2021, Greggs is maintaining a strong financial position for the benefit of all its stakeholders whilst developing new ways for customers to shop with us through digital channels and estate growth. We have a strong pipeline of new shop opportunities and expect to open 100 net new stores in the year ahead, subject to prevailing market conditions. And then they're going to put the results out on the 16th of March 2021. So yeah, I mean, we got here that they're still planning on opening a lot of stores. Strong pipeline of new shop opportunities, 100 net new stores. So yeah, growth plans are still good. So when we're taking more new stores, we're taking delivery. That looks really positive. That the revenue can grow from that point of view. I'd like to hear if they had any plans with the Iceland deal. That would have been a bit more of that would be something that I would like to see that it did include. But hey, we might have to wait a bit longer for that. On the outlook point of view, you can see what we saw about. It won't return to pre-COVID levels until 2022. Now, when it says the words here, we do not expect that profit. So this is the big thing, because I thought if they did 85% in December, they would have been profitable. So that's the only little thing that confuses me, because it says here, I wonder what it means by expects profits. I mean, does that mean that a full year profit or a month of profit? Because I want to know, the thing that really annoyed me is that I wanted to know in December how close that was to profit. I want to know if it was still profit or if it wasn't profit. So that's the only thing that I wanted in here that was missed. I wanted a bit more detail about profit and how close that was in December. So yeah, I would have loved that, but it's not there. I think that when it says we do not expect profits until 2022, as me as an investor, I think that might be sandbagged, because as me as an investor, I do want them to return to profit before 2022. I think that in 2021, and I'm not saying straight off the bat, but I definitely expect by the time we get to Q3 and Q4, I expect Greggs to start pulling some profit in. So yeah, I mean, that could just be management sandbagging and they might agree with me. But yeah, I think that was, it's probably better that they go overestimate, so then they can be like, in 2021, if Q3 and Q4 they go, hey, you look, we made profit, then that will be good because it's not expected. But realistically, yeah, I have a bit more expectations than that, but hey, I think it could be management just sandbagging, so I'm not going to worry about that too much because I think they will achieve it. So yeah, overall, pretty decent earnings, happy with the Just Eat numbers. Would love a bit more about profit, would love a bit more about Iceland. I would have liked to hear that, but yeah, overall, I can't, the December month was standout excellent. That was really, really positive to see that there's still the demand there in December. And yeah, I think when you take in the Just Eat facts, the fact that stores are still going to continue to grow, it looks like Greggs is definitely set for a good Q3, Q4 when we see a bit of normality come back. So yeah, really good from that point of view. And I guess reason why as well the share price has really shot up from that news, all this earnings, was even though the earnings weren't, 10 out of 10 earnings, I think just because I was looking at this the other day, like you look at the share price is still massively sold off. It's definitely, when you look at that share price, it's still really cheap. It's nowhere near COVID levels compared to something else that's, fully recovered. So yeah, you're considering this stock now is pretty much, in my opinion, about 6-12 months away from getting back to normality. And it's still on the, a 30-40% drop in the share price is crazy. And that's probably why the pop is just, it's so negative. And that's, people have gone, actually, that's pretty decent. So yeah, even though the earnings aren't standout, I guess this is just negativity that's just getting knocked to one side, which is good from Greg's point of view. And overall, yeah, I think for me, probably 7 or 8 out of 10 earnings in my point of view. So yeah, hope you enjoyed it. We're not talked about Greggs for a while, so good to talk about it again. Getting some news out there. Let me know what you think about the earnings. Give it a score out of 10 in the comments. And if you do want to buy Greggs, there's a link to a Trading 212 account and a free trade account. And if you buy Greggs on there and you open an account up with that link, you also get a free share, which is pretty good. Smash the like button, subscribe if you're new around here, and I'll see you next video.